If you're registered for self-assessment, are you always left confused every January about how much tax you need to pay to Hmrc and by when? Well, don't suffer any longer, just watch this video and I'll break it down for you in the simplest of ways so that you'll never be confused again. Hi, I'm Claire Hancock and I'm an accountant and entrepreneur here at Business Geek, and I help people just like you who want to start, run and grow their business by sharing my expert advice on everything finance and business. So if you're wanting to start, run or grow your small business, be sure to subscribe to my channel and click the bell notifications because you don't want to miss out. If you're one of the 12 million people in the UK that are registered for self-assessment, you'll know that you need to file your tax return and pay your tax bill by the 31st of January. But are you left scratching your head because the amount of money that Hmrc is asking you to pay doesn't equal the amount that's shown on your tax return? And the reality is, most people don't have spare cash lying around. So you can't pay too much, and you definitely don't want to pay too little because you risk getting a fine. And if that sounds like you, you're in the right place. Because in this video, we will cover what are payments on account, when you have to pay them, and how they're calculated. So make sure you stay tuned right till the end because I'll give you some handy tips on what to do if you can't afford to pay your tax bill. We're going to begin by looking at what are payments on account. And to explain that to you by looking at how people that are employed pay tax. And most people watching this have probably been an employee at some point in your life, and you know that your employer pays you every month and deducts taxes at source. They deduct the tax from your salary. So you see this effect when you're an employee, that you get paid every month that you earn and you pay the tax in the month that you earn the money. It's really straightforward. When you get to the end of the year, you don't have a tax return to worry about and you paid all the tax that's due. But when you register to become self-employed, you pay your tax at the end of the tax year. So we see this effect. You start earning in April at the beginning of the tax year, April the 6th, that runs to the following April the 5th. And then you have 9 months to do your tax return and pay the tax that's due on the 31st of January. That applies to anybody that does a self-assessment tax return and pays less than £1,000 in tax. But if you pay more than £1,000 in tax, then you get entered into the payment on account scheme. And that means that you pay your tax in 3 instalments. So really straightforward, we can simplify that by saying the tax year starts in April, you pay your first payment on account the following January, your second payment on account in July, and the tax return and balancing payment is due the following January. So that's 22 months after the start of the tax year that you do your tax return and make the final payment. 22 months later. So now we'll move on to have a look at who has to pay payments on account, or POAs. And as we just saw, this was anybody whose tax bill is over £1,000. So if that happens to you, the following year, payments on account will apply to you. And the other thing to bear in mind, if you pay 80% or more of your tax through payroll, then you will not be enrolled onto the payment on account scheme. Okay, so already we've covered that the payments on account apply after your first year of tax due being over £1,000, and you then pay in 3 instalments, January, July and January. But we can see the issue there, that there's 2 Januaries, which means that tax year payments are going to overlap every January. And this is where it gets really confusing for people. So let's break this down and work through this together. So what we have here is we have our calendar years across the top with our payments in January and July. And what we're going to do is we're going to overlay the tax years down the left-hand side so you can see how they cross over and therefore how Hmrc are calculating how much tax you need to pay. So we'll start with the tax year 21-22, and that's the 6th of April 2021 to the 5th of April 2022. Okay, so imagine that this is the very first year that you're registered for self-assessment. The first time that you need to do your tax return is in January 2023. So you'll do your tax return and you need to pay tax on the same date. Let's say that your tax bill is £10,000, a nice round number to help with the maths here. So your very first year of self-assessment, your earnings are £10,000, you don't have any employment, so you're not paying anything via PAYE. So as you've crossed over that £1,000 tax threshold, you're now entered into the payments on account scheme for the following tax year. So for the tax year 2022-2023 payments on account apply, which means that your first payment on account is also due right now in January 2023. So your first payment on account will be 50% of the tax that was due in the prior tax year. That's how it's calculated. So your tax year 2021-22 was £10,000. You're going to pay 50% of that right now for the tax year that we're in now. You're going to pay the second payment related to that in July and do your tax return in January 2024 and pay the balancing payment. So we can see already in January 23, we're paying the tax from the tax year that ended back in April, plus the tax year that we're in at the moment, 50% of that tax. So that's why the tax that Hmrc is asking you to pay is £15,000 and not the £10,000 that your tax return says. So this problem only occurs in the first year of self-assessment when you go over that threshold and get entered into the POA. And this often catches most people out. So don't worry, don't feel silly about it. It's something that happens to nearly everybody. So when we add the next tax year into the equation, what we can see is that because you're now in the payment on account scheme, you're basically paying most of your tax in 2 instalments in January and July with a balancing payment the following January. So what you can see at the bottom here is when you add up the payments that are made in January and July, they start to even out across the year. So it's only this very first January when you get entered into the payment on account schemes, you have such a large payment to find. So to avoid ever being confused again about why Hmrc is asking you to make payments on account, I'd suggest maybe take a handy little screenshot of this screen because it breaks it down in a really simple way. And you can see that you've got your next 5 tax years on here too. So you'll be covered right up until you do your tax return in 2028. So how are the payments on account calculated? Well, they're always calculated at 50% of the prior year's tax bill. So if you expect your earnings to drop, it's really important that you go onto the Hmrc website and you request a reduction in the payments of account. It's really easy to do. Log into the Hmrc website, find the link and reduce your payments on account. So now on to my handy tips of what to do if you get caught out with a tax bill that you just can't afford to pay. So if you get to either January or July and you don't have the cash in the bank to pay your tax bill, then the first thing you need to do is go onto the Hmrc website or the app and request a time to pay arrangement. So as long as the total tax that you need to pay is less than £30,000, you can self-serve online. And a time to pay arrangement allows you to spread your tax bill over up to 12 months and to pay by direct debit. So if you've got a tax bill of less than £30,000 that you're struggling to pay, make sure you do that right away. Hmrc will charge you a very small amount of interest to do this, but often you'll find that it's a much lower rate than if you had to go and get a loan from a bank or use a credit card or something like that to pay your tax bill. So that's the first thing everybody should always do, is use the time to pay arrangement. If your tax bill is over £30,000, then you do need to contact Hmrc. They often can come to an arrangement with you about paying in instalments as well. But if it's over £30,000, you have to get that in agreement from Hmrc rather than being able to self-serve on the internet or on the app. So hopefully you now understand in full exactly how much Hmrc is asking you to pay, why and when, so you'll never be confused again. So what do you think about the payment on account system? Let me know in the comments below. And if you found this helpful, don't forget to subscribe to my channel for lots more tips and expert advice on how to start, run and grow your business.